Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club. Welcome to the weekly Forex forecast for the week starting of 24 of February to the 1st of March 2019. Previous week, as you know, I was not around, so first of all I would like to thank Jordan for taking the action and for uploading a weekly forecast for the community. I hope you guys enjoyed it. Jordan, if you are watching my video, thumbs up. Thank you very much for your help. This week I am back, and I'm sorry if my voice is not at my best and my energies are a bit lower. I am still sick, unfortunately. Got some virus or whatever in the last couple of days. Anyway, I did not want to give up on this preparation for this week, so hopefully you enjoy that and you find it useful. If you love the work, please show your support back, hit the like button, drop some feedback below. Your help would be very much appreciated. Just before we start, quick update that on Monday, as every single week, I upload a weekly forecast in PDF format. So just come back to the video, and in the description you would find the link to the PDF. And of course, you are invited to our completely free Telegram channel where you can find education, trading ideas, video, strategies, and many more things every single week. And to join, just go below description or the comments and you would find a link to join our Telegram. You are very welcome. So let's begin. As we do every single week, we start with observation of the previous week forecast. So basically to have a follow-up of the things and basically to show how everything develops, what worked, what failed, what is still relevant or what's irrelevant and has to be changed. As previous week I was not here, so I will go to the forecast of 2 weeks ago, the last one that I was talking about. So the dollar CAD was our first thing, and the plan of ours was sell the rallies. We are looking to go bearish, and the dollar CAD so far following our plan. That's our observation, and the pair does continue on the bearish direction. The way I see that at this stage there are no changes. This is the weekly triple cycle that we are trading. We should be heading towards the 50%, which is slightly below than 130 psychological area. We also should take a look on the developing cycle here, right? The 100% is pretty much on the same level, and if we go for a bigger view here, we would figure out that 61.8, if we take a look on that as this to be the first leg and this now to develop the second, then we get ourselves pretty much the same zone here and here, two very critical areas where I believe the pair is heading towards. So I think the current situation is bearish. The pair is developing the last leg on the daily chart. Yes, we might face some pullback, but I would be using them as opportunities to sell. And of course, for all those of you who are already in sales, there's no need to do anything else. Just keep that holding and enjoy the pips working in your favor. The invalidation for this setup would be this high for one reason. If we do break this high, there is a bigger chance of a deeper correction upwards, and who knows, maybe to new high. So we have to be very specific with invalidating our plan, and our plan is bearish as long as this top holds. The next pair we had on the list, just to summarize, dollar CAD, I was and remain still bearish. The next one on the list was the pound versus the dollar, where I said in my forecast, the way I see that, we should be getting rallies for this pair. That was the first zone I wanted to see if it holds. It didn't hold. This area failed, but this was our alternative plan to get a second drop here. Right, that was the area. We got this movement to the downside, bullish divergence came in play, and here we are rallying since then. And this rally is pretty impressive. We are speaking here about 300 pips. So this is pretty much how things work. We wanted to see the clearance zone right here, right? Clearing that and then starting the rally. For this scenario, this area was cleaned right here, as you can see, right? And since we are in a rally, so my personal view is that this pair still remains bullish. The way I see that we are heading towards 61.8 of the cycle, so I would be I would be personally expecting the pair to approach towards 132 or even higher, and maybe with a very big probability all the way to 135, which would be full duplication of this place. But first of all, I do think that this place should use us as a resistance. So the way that currently that this pair is holding, and by the way, this is very, very important to say right now, the current week is going to be very fundamental, especially for the pounds. We have the speech from Carney, we have the inflation report coming on Tuesday, then a lot of things related to US dollar. We have the consumer confidence in the US, the Chairman Powell to testify both Tuesday and Wednesday. Then we have GDP in the US on Thursday and Friday, and also speech from Powell. And then on Friday we have the manufacturing PMI, ISM manufacturing PMI in the US. Now it will be very interesting to see what Powell will bring with it, because if you remember, he was very hawkish, very serious about the hiking of the rates, the continuation, and then Trump publicly abused him and his approach. Powell changed his words. We saw the dollar reacting immediately. It will be very interesting to see what will happen at this time. So personally, and I would approach careful to the pound, especially because of what happens with Brexit and with the changing of the parties there. I would be looking for buys, but with lower risk, not to find myself in risky conditions with this pair. Better stay safe. And basically for me, as long as this area, this would be my invalidation zone, right? As long as it holds, I would be looking for buys. So this is the invalidation. We might be expecting the pound dollar continue from here, or trying to correct slightly lower and providing the buys again. So I remain bullish in my view, which means I would be looking for buy setups. For all those of you who are holding the buys from this area, as we have been covering a couple of weeks ago, just manage your positions. There's nothing new to be done if you already run with the trade. The next one was the euro versus the pound. We were looking for sells. That was one of the scenarios to try and see new high and then sell to continue. So here we got the second leg, right? Now I ideally wanted to see this top cleared, and it didn't happen. It came close to that. This high was cleaned, never the real swing, which again there is ideal condition in the market and there is real condition in the market. Not always they meet, but since this place we got a breakout, we got a continuation. From my point of view, euro pound was and remains bearish, and I would be looking to continue in the sells. So from my point of view, we are heading lower. Yes, we might see some kind of a pullback. For me, I will be using that as a sell opportunity. Sell if you are already in from the couple of weeks ago scenario, just keep it going. If not, look to get the sells after the rallies. And bearish evidence. What could be a bearish evidence for a rally? Bearish divergence, two waves, so that could be something like that, for example. 1, 2, and continuation, right? That could be some kind of a false break here, and then switching to lower lows, right? And then a sell, definitely a possibility, or simply dance in a range. Oops. Let's remove that. right? Simply dance in your range for some time and then continue lower. Also a strong possibility in the behavior. Again, a lot of news to come this week. We have to approach carefully. So my view remains bearish. CAD franc, the view was to get double wave correction and a rally. Now look what happened with this pair. We got the two waves, but it was so fast. You see, that was like boom and boom right away, blocking with a double bottom. Now personally, I was under impression it can get us a better lower low here, but it blocked as a double bottom. Since then, the pair is creating a consolidation, which very likely would try and push that higher. Now, I would approach here, my personal view was and remains bullish here for the very long term. I would be careful due to the daily divergence that we already are facing. There is a good chance that, let me just remove this, oops, sorry, just remove the lines here. There is a good chance that this might turn to be a fake breakout, right? If it is a fake breakout and we retrace right inside and then start to create the lower lows situation here, then the correction might be what do I press here? The correction might be slightly deeper before the further continuation. This or other way around, I am personally after buy setups in this pair, and I think it has where to go. There is a critical level here which I think the pair might go and try to reach, and before that there are several closer levels that the pair might be heading towards. So personally, I'm after buys. That was and remains the plan. Australian dollar, we wanted to see a new low. Let's go to the 4-hour chart. Here we go. That was our plan right here. We wanted to see a new low, a bullish divergence to appear and to start the rally, right? So the Aussie dollar worked pretty much nicely, but since then, on the last couple of weeks, look what it does. It stands on the same zone. Personally, these situations I like less, and here is what I like less. As you know, one of the things I'm teaching always in my forecasts and also in my live rooms, that's the very, very basics of definition of a trend. Bullish trend is defined when you have higher highs and higher lows. After that, we can start looking for retraces and look for buy continuation. Now, in that case, we did have the higher highs, higher lows. It was a classical condition. But the retrace down was one straight leg, and normally the corrective cycles are in two legs or in a range. This is one straight move down through all the Fibonacci levels. So you take the triple high rally and look, it goes through all the Fibonacci levels. So my personal view remains bullish for the long term. Currently, I'm not confident about this structure. I personally don't see nothing here. A lot of different signals from the short and the longer term. So I would be looking for better setups. If this mini range it has on a daily chart would survive, then this pair definitely might be in the future gaining serious rally reasons. But I would not be surprised if we are going to get some two waves like that, some better divergence plays, right? Maybe retest this trend line after the one spike already hit it, and from there a rally. So I would not rush with the Aussie dollar. Yes, I am bullish for the long term. The short term is kind of tricky. So be careful here. Nothing I can say is attractive. Now pound versus the Kiwi on a before the 2 weeks, 3 weeks ago, this plan worked as a sugar, and a couple of weeks ago we had a plan of buy retraces. Now this plan failed completely, and here is the pound versus the Kiwi. That was the idea, right? That idea was look for buy setups. Did not work, and the invalidation level was triggered. Basically, the whole plan failed. So the biggest question is what's next from here. According to the monthly chart, my view still remains bullish, which means I would expect this. But that's for a very, very long term. For the shorter view, according to the weekly chart, we already had triple cycle to the upside, which you know stands for a bullish trend definition. We did have one leg correction, but it sits inside Fibonacci retraces, not as the Aussie dollar, which I showed you before. And we do have here a bullish hidden divergence scenario, which means we are after buys. On the short view though, look at the daily chart. We have two waves up, right, and then two waves down. They were broken after bullish divergence, so theoretically the buy setups are ready for us. And my view still remains, due to the long term, looking for the buys setups. So the way I would be approaching to that would be two waves and looking for the buys, or holding the range scenario. Let me just remove these lines. Holding the range scenario, we got a false break on the bottom here. We got a false break on the top here. We might be heading towards this low, and then start looking for bullish setups. So for me, I would be looking to buy the retraces with a bullish evidence. Bullish divergence, false breaks, trendline breakouts, or simple structure of higher highs. So let's say we are dropping down, and then on the lower time frame get the higher highs, and then start looking for the buy retraces. So that's for the pound versus the Kiwi. Euro Aussie, our plan was two waves or range for sales. So far we are holding this exactly. Nothing more than that to offer. My plan, according to the weekly chart, is for sales. The plan still remains the same. The pair might be holding this range. On the daily you can see that as well, right? We might be holding the range, or the pair might try to make the two waves, but the idea would be the same exactly. Looking for sell the rallies, and sell the rallies only. My plan was and remains bearish here. New Zealandian Canadian, we wanted to see one more low right here. Let's take a look. New Zealandian Canadian here. I wanted to see that going to, what was my level here, 089 or even 088. So the pair did cross the 089 right here slightly, kissed the 089, never reached the 088. So the biggest question is what's next. My personal view remains bearish, and here is why. We are still at the end of this triple cycle, all right, which means we are after the two waves correction, or continue to move inside the range. The structure currently is lower highs, lower lows, so it's mainly for sell. Weekly last divergence is bearish, hidden. So I personally think we are holding this daily range, and we should be heading north, south. Sorry. So personally, I would be looking for sells. This would be an validation area for me, and I would be looking for sell setups here, or after slightly rally. Basically expecting one more low to be created. So for me, it remains bearish. Euro Yen. Now Euro Yen, the idea was to get a rally and one more drop. Couple of weeks ago, Here we go, right? So we got the rally, we got the drop, we never got a new low. It blocked as a double bottom with a bullish divergence. Now here comes the thing. I always say, when you build a plan, it's good, but never marry a plan. Only market knows what will happen and how it will happen. Always have the ability to adjust. At the moment you see signs against you, don't try to be smarter than the market. If your plan does not develop the way you expect it to, why would you fight with the market? To what? To prove that you are right? That's the easiest way to lose money in trading. So at the moment you have your plan, but you start to develop signs against you, like double bottom, like levels to hold, like divergences against you. First thing to do is protect yourself. So if the market retraces, you do not lose a trade. That means stop loss to break even or partial cash out, but never let profitable condition and situation turn to be a losing one. So the biggest question was, where are the lines here? The biggest question was the euro yen, what's next? Personally, I still think we are after sells, but to be honest, why it's not changing now? Here. But to be honest, I don't see any clear setup at this moment and at this stage. The retrace after the bottom, the double bottom, doesn't provide any new cycle, any new view. So for me, euro yen becomes neutral. The next one on the list was the euro dollar. We were bearish towards 112.50, and if 112.50 would be broken, 110 to be reached. So the euro dollar did reach the 112.50. It was right here, right? We got it moving all the way down. The question is what's next. Now, personally, again, I don't see nothing with the euro dollar at this stage. I would not be surprised if we see that pushing lower. The conditions around Eurozone are not as good. So I would be looking for sells on the euro dollar, most likely. Sell the rallies. It's not as obvious, it's not as clear, but for me it's bearish. Invalidation would be this top, and I would be expecting the euro dollar to continue lower. Of course, I might be wrong here, so the approach, the way I see that, should be with smaller risk. The weekly starts to develop possible divergence. Smaller risk is the better idea here, and that's what I plan to do for myself. And for the gold, one of the setups we wanted to see was to get a new high with a new false break for a sell. And we got the new high, we get the false break. So the way I see that, the gold is in a fighting zone, and I think the gold is going into correction. It might be from here, might be trying a little push. I would be looking from these areas for sell setups. Sell the rallies with bearish evidences is my personal plan. Now, before I move on with the commodities, there is one more thing I would like to add. This is the dollar index, something I've been asked about. I want to share my personal longer view. Now, as I see that, the index is in a triple cycle. It could be also called special, doesn't really matter. After such thing, we are facing normally corrective cycles. Corrective cycles could be two waves. Corrective cycles could be range. In that situation, we are fit in both. We do have a false break on the top, we do have a false break on the bottom. We might continue inside the range for a while, and I would not be surprised it happens. According to the weekly chart, we already faced one false break. We might be facing one more attempt for a high here, but I think it's fighting time. So dollar might rally, but that will very likely be short-term things. So rallies would react the way I see that. The rallies should react with immediate fight from the bearish view. So my personal view that if we do have rallies on the dollar index, I would be looking for the next bearish divergences and attempt to sell. A lot of things would depend on Powell and his speeches this week, so pay attention to that. Now let's go back to our forecast. Silver, we wanted to see one more high for a sell as one of our scenarios. We got that going. We got the high. We never really managed to obviously clean this high, but it was right at this area, right, kissing it. So it's pretty fair, pretty good. We have the divergence here, which means silver is under bearish pressure, and same story as with the gold. For me, that's on the short term, sell the rallies, and where from after the drops would happen, I'll be looking for long-term buys again. Now indices, DAX, my personal view was to see one more rally after a drop. Here we go. Now this was the leg down. I was expecting it to be a bit lower, so something like that. This is what I would imagine. Then one more rally. So the rally started a bit earlier than I was expecting to. That was my expectation, as you remember here. So the drop down was not really as deep as I planned, but the rally did start happening. So the way I see that, we are approaching to the end of the rally, getting very close to a reversal zone. There are two critical areas for the DAX. One of them is here, the 61.8. The next one is slightly higher, around 12,000. And what I would be looking here is basically a reversal pattern. Lower lows after a false break and then sell the rally, or alternatively on the lower time frames. Let's go back to the lower time frame, for example, or alternatively start from here to create lower highs, lower lows, and then sell the rally. And again, that could happen around this area or slightly higher around the 100 level. The divergence already is developing and starts to look good. So get ready. And once you start to face false breaks, that would be the time to finish with the rallies if you are involved with them. So that's pretty much it for this week. Some of the pairs are personally not so clear to me. A lot of the yen pairs, for example, they are zigzagging in a very, very narrow ranges. I would not be surprised if after this week and Powell speeches, the yen pairs and the indices would wake up and start to build up the next possible setups. So there's a good chance on the next week we will see them. So that's pretty much all. If you enjoy the work and enjoy the video, please show your support back, hit the like button, drop some feedback below. Your help is very much appreciated. Once again, I would like to invite you to our totally free Telegram channel. To join, just go below in the description. And I would like to invite you to the live trading rooms where we go over all the most interesting setups day after day. And to join the live trading rooms, join Traders Academy Club. Also, the invitation link is below in the description. Thank you very much for your time watching this video. I'm Vladimir Ribakov from Traders Academy Club, and I wish you a wonderful and successful trading week. Thank you. See you soon.